So where is the Sarasota real estate market heading? Are prices still going up? Are they coming down? I mean, are they going to crash? I'm hearing all kinds of rumors. And today we're going to give you some statistical trends to give you an idea of what I think is going to happen through the rest of the year. And if you stick with me to the end of the video, we're going to talk about the difference between a real estate investment and the stock market investment. We're going to show you the difference in the volatility. Are they tied together? Is real estate tied to the stock market crashing or the stock market booming? We're going to talk about that at the very end. So stick with me as we jump into what's the state of the market. So today we're going to talk about where is the market heading, nationally and locally. Now, everyone has an opinion, and one thing I've learned about being in real estate for over 20 years is that everyone is either an expert or they know someone who is. So let's look at somewhat what the country's leading housing experts are saying and what are they thinking. They're starting to release their projections for the rest of the year. So these insights may give you some clarity and they may help you feel a little bit more optimistic. So the Business Insider sums up the national forecasts like this. As mortgage rates continue to go down, affordability, of course, is going to improve slightly. That's what they're expecting, and inventory is also expected to grow, which we're seeing a lot locally, which should help moderate price growth and make finding a home easier. So that's the national projection, and I'd say the same thing is happening here locally. So let's break that down nationally and then locally. So mortgage rates should come down slightly. I'm hearing a lot of people saying, I'm going to wait till the rates come down. Well, they're not coming down points. They might come down in half a point. Historically, we're right in the sweet spots of where rates have been for years and years and years. So don't expect it to jump back down into the fours or anything like that. As you can see, there's 7 different projections from 6% to high sixes, averaging at 6.39. So that's what I'm guessing we're going to be looking at. Probably won't dip below that 6%. Maybe we do, but that is my projection, and that is what the national forecast is too. But even just a slight little decrease is going to help some people, jump off the fence, start looking for a home, and just a little bit a decrease will help your mortgage. You can buy more house for the money. That's why it was so easy to buy when rates were so low. But just remember, inflation, employment, broader economic shifts they may not drop substantially. So don't try to time the market that you're not going to find huge interest rate drops. Now, inventory throughout the country and especially here is going to continue to grow. It's already improved a lot from this last year. A big portion of the growth the market has already seen is because homeowners for the past couple of years are just getting tired of sitting on the sidelines. They're tired of waiting. They had some good rates and they don't want to move, or just they're expecting prices to drop, rates to go down. Whatever they're expecting, they pretty much are starting to give up. So this is one of the reasons that more homes have been listed recently, and it's been rising month over month. So that's good if you're a buyer, of course. And as you can see right here, this is a local one. So this was around 6%, give or take, up and down or whatever. But just recently, we've got 23 months worth of homes. So that's pretty outrageous and pretty strong. Don't expect it to last forever, but that is something significant. So as more homes hit the market, of course, there's going to be less upward pressure on home prices. So nationally, here's the forecasted for growth, around 2% here. We've got one that's going down 2% out of these. That's the average of all these 7 forecasts. And you combine that with slightly less mortgage rates, and it could be more buying power ahead for everyone nationally. But locally, as the inventory climbs, this is what I'm expecting to be in the red. I'm expecting the 2 to 3%, or just what we are right now is just static, not anything happening really. So once again, you're seeing, here's the inventory, there's what's happening. It's and real estate is very hyper local. So in our area, I expect prices to dip, even a little bit more. So like I said, 2 to 3%. I don't expect these big 5, 10%, things to happen. Maybe we pick up at the beginning of next year, towards the end of the year, but I'm expecting prices to decline even further than what they are, but slightly, 2%. So shouldn't hold you back on something like buying a house, because that 2% may cost you in the long run if you're sitting around, especially if you have a house to sell. So if you're thinking about your own move, maybe you've noticed, inventory has been on the market a little longer, and it's starting to linger. So why is that? Well, rising inventory. I'm going to give you some actionable tips here in a minute, but here's what's really going on. Since the pandemic, we've kind of had a mixed bag. Some homes are flying off the market while others are sitting for months and months. So what is it about that? So if you notice here, this is the national rate. 50% right now, was down 40, was up higher than that pre-pandemic. So one thing you want to notice is that we've slowed down, but we're actually historically selling for shorter than we were years ago. So that's a good sign, and that's just a sign of a healthy market. You should have at least 6 months of inventory. That makes a better equilibrium between sellers and buyers, and that's what we should expect, months on the market instead of 30 days like we had in the past. But don't get hung up on these 10 to 15 day marks or whatever over the past few years. As you can see, this is April of 2025. A typical home nationally spent 50 days on the market. So that's 13 straight months of taking longer to sell. And that is a correction that was needed, but is a healthy one. But if it gets way out of whack, like we're kind of getting here in Sarasota, then you'll see some price depreciation. And that's what you end up looking at. So I wanted to show you this, days to sell in different price ranges. So each one of these columns represent 100,000 in price increases to over $1 million. So this chart breaks down the number of days to sell based on price points in Sarasota. And if you notice, the $400,000 to $800,000 homes, they take the shortest amount to sell. So that lets us know in between here is the sweet spot of the pricing demand. So people are looking for homes in Sarasota between 400 and 800,000. That's the most demand. And just remember, a rising tide raises all boats, and lowering tide lowers all boats. So that's what's happening right now. So if you think you're selling your home for less than you'd hope based on previous years, remember, you're also getting a better deal on the home that you're buying that you would have not gotten over previous years. So you're getting a little bit less off of your home when you sell, but you're getting a better deal when you buy. So what's the real difference? Why does some homes attract more buyers instantly while others seem to struggle? And that's an interesting case. Number one really is wasting it right. This is one of my biggest reasons why homes sit on the market. It's overpricing. Now, many sellers, they want to shoot for a higher price, and then they think they can lower it later, but that actually backfires. You're just chasing the market down. It turns buyers off. And I'm seeing huge gaps between the original price, asking price, and the eventual selling price, 7 to 8%. So look at this, 93. So this is an 8% difference of what homes were listed for versus what they're selling for. So say on an average $500,000 home, that's $40,000 difference. So you do not want to get, caught chasing the market. Recently, I did a study for my HOA board, my community that I live in, and I was just astonished at the ridiculous pricing and the futile attempts to sell certain homes. The owners and the agents, these were all listed homes, folks. These weren't for sale by owners where people are often off. These were listed by agents, and they're just chasing the market down. Some are actually coming up on nearly a year on the market. So that tells you something. The market has rejected your price. So I know no one wants to leave money on the table, but I can't stress this enough. Work with an agent who wants to make sure that your house is priced right now and into the future. So, for example, if you're pricing it for what the market was 3 months ago, guess what? You're already overpriced. So my advice to sellers is to price your home fairly for the shifting market, and you may need to price it lower than your initial instinct to sell it quickly and to avoid future concessions. So that gives you, once again, we're talking about days on market. You're seeing prices here coming down in May, starting and then going back down. So that's having a toll, the inventory on the market and overpricing. So focus on the first impression. I'm not going to dwell on this, but folks, curb appeal, messy house, paint the house, do these minor things up front for the outside. I can't tell you how many times I've been in a car with people, driven up to the house, and they said, yeah, we're not interested. Let's go to the next house. They're not even willing to look inside because they've already been turned off by the outside, the exterior. So those are simple things. And once again, these are things that should be, without saying, you need great high quality listing photos. I still see people taking their own photos, the agent taking these terrible photos. Every search always starts from the internet almost. So you've got to draw them in from the internet and, use your agent's expertise. They should have these resources. They should be spending money to sell the home. They should be having great marketing. I mean, they should be writing beautiful, detailed descriptions, highlighting the differentiation, what makes your house special, what are the features of your house. Multiple platforms it should be on social media sites. And here is one of the things that I rarely see agents do. You got to do it. Target marketing directed to the most optimal buyer for your type of home and your type of neighborhood. So basically what that means is somebody has to figure out who's the perfect buyer for your home. What kind of income do they make? How many kids do they have? Are they empty nesters? They have met multiple kids? What kind of credit score? What are they looking for in amenities? You have to figure that out and target to that particular buyer. And we always hear location, 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 but I know you can't pick up your house and move it, but you should really be always highlighting the best features of your neighborhood or your community. Does it have great schools? Does it have great shopping nearby? Highlight those things, showcase those things. And the bottom line is, greater knowledge equals greater results. So the more you know, the better your real estate agent is. Homes that sell quickly don't have necessarily better features. They often have better agents with a better strategy. So as I always say, if you're in the Sarasota area and you need to sell, buy, or sell and buy both, we've got you covered with a great plan. It's going to make the transaction incredibly easy. It's a piece of cake. Just call, text, or email, and we'll show you exactly how we do it, how we're so successful at it, and what makes us different. The marketing is the key. And we have plans for everyone. So don't think that we sell in high ends, low end, or whatever. We have a specific plan for that particular home and that particular neighborhood. So, if you'd like, just jump on a free Zoom call. We'll explain it to you. You can schedule one on my calendar right below. Just get on my calendar and I'll talk to you about what you might need to do. Now, with all this uncertainty in the economy, we've got between rates and tariffs and inflation and all this stuff, stock market's been bouncing around a lot more than usual. And if you've been watching your 401, you're probably getting a little nervous, up one day, down the next, all this stuff. But wanted to show you how real estate compares to the stock market. Is it attached? No. So, one thing that Investopedia says, traditionally, stocks have been far more volatile than real estate. And that's not to say that real estate prices aren't ever volatile. We had 2008 financial crisis, and there was a reason behind that, and we've corrected that. But stocks are more prone to everything. And I just pulled this up. This is an old graph that I had just showing how real estate is a really good long-term investment. In the red, you see the mortgage. As you see, you're paying it down. Mortgage balance gets paid down. You pay more towards the balance than the interest over years. And of course, your equity goes up. And, we're conservative with the annual 3% interest rate that has gone on since mortgages were invented. So over decades, that 2.5% to 3% has always proven positive. You might go up 20, down 20, up 5, down 4, whatever it might be. But over the course of the time, it's always been on that curve up. So while your stocks, might go up and down, showing here, real estate in blue isn't correlated to that. So as you can see, in different times back to the 80s, stocks going down greatly, real estate tiny, up, down, up and down. So this one particular one is kind of an anomaly. So this was the crash in 2008, which was an exception, not the rule, but everyone remembers that one. The stock market crash was caused by loose lending practices, subprime mortgages, and oversupply of home. That's what happened here. The real estate, people were telling me, oh, I'm buying my second and third home. Just kind of playing it like it was the lottery, like I'm going to automatically make money. And they had no money down, so they just dropped those homes. So we had a really ridiculous supply, really ridiculous lending. So they've fixed that, and hopefully they never go back to that. But that has made a huge difference. And here in Sarasota in particular, most of after the crash, most of the buys were cash. So people here have a lot of equity in their homes, lots of equity and a lot of cash buyers. So we don't expect that to be an issue here as far as foreclosures and stuff like that. So that makes a big difference. And I'm going to show you here that as we can see, the volatility of the stock market, the S&P, the in orange and home prices. So, it goes up 30% a year, up and down, but basically stock values jump up and down more than home prices will ever. Real estate, on the other hand, is usually something that you don't see the dramatic swings, except for something that's national, like COVID, or something where we have dramatic poor lending practices. So, and the other thing about home pricing, and as far as a home itself, take out the fact that it is an investment. And if you don't buy a home, you find yourself when you're young and you don't buy a home, you're still renting for the rest of your life, and those rates go up just like home prices go up. So you're getting hit twofold, and you don't even have a home that you've paid off. And take out the part where it's an investment. Really, a home is just some place that you can make memories, and something that really keeps your life stable. So take that out, but it is totally a different investment than the stock market. So if you want more information on a particular neighborhood and see how it's faring, what's going on in this particular neighborhood, I'm interested in that. Are we going up or down, or how do we compare to the rest of Sarasota and the rest of the region, Florida, United States, whatever it is, reach out to me direct. I'll give you an update, a daily, an update to wherever we're at. Whenever you call me, I'll give you an update to that day, and we'll really try to help you focus on what's the trend, where's it going, what's happening, is this the right time to move? For living and buying in Sarasota, I'm Rob Rovnak, your local real estate consultant.